Can you guys see my screen okay?
Yes, good.
Okay, great. Okay, thank you everyone. I appreciate the opportunity to introduce CQG China Solution today to the audience. We're honored to be featured by INE as one of the key technology contributors in the past few years since China launched its international contracts in its futures market. We have been sort of deep-rooted in the community in terms of supporting different sort of parties in the entire ecosystem to get connected from offshore to onshore as well as onshore to offshore. We appreciate INE sort of give us the opportunity to showcase how do we sort of provide a very integrated solution to both our broker clients as well as our trading clients. So let's get to it. So who is CQG? We are a 40-year-old company based out of Denver, Colorado since 1980. In fact, we've just celebrated our 40-year-old birthday last year. We are a well-recognized and trusted name in the futures space globally. We started offering services as a analytical platform in the early days, and then with the electronic trading becomes mainstream, we also started doing a lot of order routing and market data distribution in the industry. We currently provide about 85 market data sources globally, most of them directly from the exchange. We also have 45 DMA connections that does order routing directly at the exchange. We currently work with 135 and more FCM partners globally that give us a very kind of powerful network, allowing our brokers to conduct a lot of the sort of offshore business, cross-border business, as well as allowing some brokers that may not have clearing relationship at the exchange to sort of combine their volume into the clearing members sort of connection at the exchange. We currently have 16 offices globally located in all the financial hubs. In Asia, we have offices in Shanghai, Hong Kong, Sydney, Tokyo, and Singapore. And then we have local infrastructures in those locations to make sure that all the services are carried out with kind of best-in-class security and stability. Currently, we offer services in 60 countries as well. I'd like to also mention that we started by offering the service to just the trading clients. However, as we evolved, we understood that a lot of the workflow is really combined between the broker and the clients. So we designed a solution that really covers a lot of grounds for both FCMs and the trading clients. So on the left-hand side, you see risk management and account management. These features are designed specifically to serve the requirements from the FCM clients. We offer the best-in-class risk management system that is designed for speed. It is hosted on CQG server and adds less than 1 millisecond to any trade while applying one of the most advanced risk engines. You receive all the cost-effective protections you want, and your traders receive all the speed they need. CQG's risk management system includes the sort of the custom account service tool. We call that CAST. We'll be using that interchangeably in this presentation, and we'll provide more detail on that later on. We also offer a very flexible sort of account management features. We allow you to kind of create master accounts with highly flexible sub-accounts that share purchasing power, exposures, and manage risk together. With analytics, trading, and market data is what we offer to the trading clients. With analytics, we offer various sort of advanced charting, technical analysis tool, trading decision tools, a lot of different chart types that is sort of powered with advanced algorithms to make sure they extract data at extreme kind of efficient speed. So in deriving the chart that trader needs, it kind of eliminates a lot of latency. That's critical in sort of trading scenarios. And we also offer a lot of the sort of automated algorithms, allow traders to kind of realize their strategy on our system and then execute kind of best trades to generate best alpha. Our trading is also a very sort of rigorous infrastructure that we put together globally. We monitor all the servers and facilities ourselves. We don't go through any third party, making sure that we were able to monitor our own environment at all times, 24/7. We have network operations team to make sure if there is a potential issue, we see it before it happens. We address it right there and then. We don't have to rely on any third party to sort of kind of support us in carrying out those critical tasks. So our trading is rather kind of trusted by our clients, as well as a lot of third-party software that sort of lives on our infrastructure to enable trading on their front end. And market data is also one of our core offering. We collect market data directly from the exchange in most cases. We don't really do a lot of the consolidation or filtering of data in order to save on cost. We make sure that every tick of pricing is captured in our market data sort of server. We have teams focusing just on ensuring market data is done correctly and stable across 5 regions, and make sure that all the transmission of data is optimal at all times. So how do we deliver those things that I've just talked about? We have a solution that is targeted for the FCMs. We focus on offering hosted exchange gateways to provide our customers with low latency connections to over 45 major futures, forex, equities, and cash treasury markets. We manage direct market connections for over 135 FC environment, as we talked about, and the interconnections between those environments is what enable a lot of the FCMs to sort of navigate their way through what is the most cost-effective way for them to run their business, as in non-clearing member and also clearing member. We're able to kind of save a lot of cost for our clients because we basically, the hosted service that we run does not require our clients, our FCM clients, to sort of purchase any hardware, right? All the hardware, servers, all the networks are maintained and owned by CQG. So the FCM can sort of utilize the sort of globally connected network and then achieve a very secure, low latency order routing solutions. And it's installed and maintained by us and also monitored by our service team, right? And FCMs can route orders to the exchanges using our software and API as well. We provide the industry-leading pre-trade and post-trade risk analytics module. It is easy to use, browser-based sort of platform, which I'll get into in a bit. So CQG is also one of the first in the industry to provide a comprehensive route-based risk management. CQG's route-based solution allows our clients to establish orders and position size control over exchange routes. With multiple routes per exchange, you can manage your exchange exposure. Using route-based risk management allows you to effectively and efficiently manage your exchange relationship on a exchange-by-exchange basis. So in order to sort of effectively analyze risk based on open positions and the current state of the market, working orders also have the potential to increase risk and must be incorporated into FCM's portfolio risk analysis. So our risk management system ensure that FCMs are never in position where customers' working order have added unwanted risk. We also provide state-of-the-art margining. So we provide tools that allows the client to manage risk on both an order and on account basis. More importantly, we provide tools for managing accounts balances in real time. CQG's risk engine is one of the most advanced in this industry. We use their technologies to actually support a lot of the exchanges as well. We have ongoing projects at NASDAQ and also with some of the other exchanges when they have sort of new environment they like to outsource the technological development. We are usually the vendor they would consider. So we have onboarded several venues for various exchanges. We also use this technology to sort of provide a lot of OTC environment that exchanges or FCMs they like to self-manage. We also maximize brokers' protection by using exchange published risk array in our calculation and determining margin accounts requirements on the basis of overall portfolio risk. So we call it a span-like calculation. Also, for our brokers to effectively manage their clients, we also offer a very flexible sort of account types in our kind of client management system. We offer single accounts, give-up accounts, group accounts with shared purchasing power, omnibus account, which is crucial for us to support the sort of relationship between offshore brokers and China onshore clearing brokers. We also offer various types of commercial accounts. So with the omnibus account, what we basically allow our broker to do is to make sure that the clients that you onboard offshore can be non-disclosed to the clearing broker on the onshore side. So that way, you're able to kind of set the risk limit and other sort of risk parameters on the sort of account that you manage. And on the receiving end of the omnibus route, the China clearing brokers can set route level sort of risk settings. So that is crucial in how CQG is able to sort of provide the very interconnected solution between offshore and onshore at a very scaled and secured way. You can also see at the bottom of the slide, we have a full array of trading product, which I'll introduce in more detail down the road. So as you can see, we have been providing analytics, trading, market data, for over 40 years. Unlike some of the other platforms out there that probably has footprints in various asset classes, we focus on futures. That is the one thing we've done since day one, and that is the one thing we still do, and we aim to maintain our position as being one of the best in the industry. As you can see, we started from offering analytics to cattle brokers from Denver, Colorado back in the 80s to today. We serve a healthy sort of mix of clients. We offer our trading front ends to CTAs and hedge funds, investment banks, to professional traders, prop trading teams, commercial firms and corporations, as well as a lot of the sort of FCMs using our software for their own broker desk as well. As the industry, financial industry, continue to evolve, the demand for technology has only gets more and more complex, and we've been trying to stay at the forefront by reinventing ourselves to provide more tools and have more sort of technology to mitigate risk and generate greater alpha for our clients. We'd like to bring that expertise over to China market as we sort of have our attention set on China opening up its commodity market, which is second largest in the world. We very early on had the conviction that China is going to be the market that we as a company focus so a lot of our resources on, and making a bet on this market once it continues to open up becomes a heavyweight in the mix of markets globally. As China sort of introduced its first internationally traded contract crude oil from INE in early 2018, we've already set up our office up and running, and then set up our teams that carries out various functions that supports not only the brokers but also some of the requirements from sort of clients using our trading front end want to access China, and we had to iron out a lot of the different details early on to make sure that there's a lot of sort of very unique instruction requirement for trading China are met early on. So from our office in Shanghai, we now constantly have conversations with all offshore brokers who has their clients sort of targeting to trade China, but they need to figure out how to connect, which technology to use, the optimal setup that's most cost effective. So we have a lot of calls with brokers from overseas to make sure that they know entering China is actually very, very cheap, and it's actually very easy, as long as you have a sort of local partner on the ground that help you to conduct a lot of communications and iron out a lot of the hurdles, with sort of a lot of these cross-border conversation, right? On the ground, we have a support team that focuses on supporting the FCM requirements, both for onshore brokers, also for offshore brokers who wants to connect in. We have product specialists, that's available in English and in Chinese and other sort of native Asia Pacific languages to offer sort of a very close-knit service tailored to the requirement from different traders, right? We also have a compliance team set up in China to constantly watch out for any sort of regulatory updates, as well as new contracts or new directions the China market is sort of navigating through and then developing. And of course, because we own a local infrastructure on the ground, so we also have maintenance individuals to make sure that all the hardwares are maintained at optimal level at all times. Okay, so this is what our infrastructure in China look like. We support all the commodity exchange as well as CFAX, and our server is located in Shanghai, Jinqiao, and we are basically allowing our broker partners to sort of do cross connect with our own server to make sure that all the traffic are done at a very close proximity. We're very involved in terms of helping brokers to kind of start integrating our solutions into their main counter system, which is CTP. There were a lot of work done early on because the integration is more than just sort of connecting the API and it works. There's different fields instructions we had to figure out early on, and we did all that 5 years ago. So now the system has been running in a very stable manner for many years, and we work with all the tier 1 brokers in China, who has the most capabilities of onboarding a lot of the foreign interested parties. A lot of the sort of Chinese brokers also have offshore branches in Singapore, in Hong Kong, in Europe, and in US, and then we also support that as a whole from our team. One thing that's very exciting, which I'll probably touch on a bit more later as well, is that currently China only allows investors to trade the international contracts offered by 3 commodity exchanges. However, as QFI sort of expansion has been announced and more details are being added every day, very soon a significant part of the commodity market in China will be offered to all the QFI investors. So you know, we're very optimistic on that development, and we are 100% ready to assist when there's new sort of you know, entrant of investors that would like to utilize that method to enter China. Okay, here is a short list of our broker network. As you can see, you know, we are connected with many of the sort of tier 1 sort of OIs that's located in various global locations, you know, and then we also work with all the tier 1 brokers in China. We currently have about 27 active trading routes running, and we facilitate millions of trades every year. This list would actually need to be updated because just in the past couple months, we've added at least 5 or 6 sort of OI relationships. Well, no, they were our relationships already, but we were able to connect those relationships with our onshore brokers in the past few months. Especially, you know, I think the European brokers are now you know, paying a lot of attention to this market, and as well as their clients sort of pushing them to kind of see connectivity to this market. So we're very glad to see that environment. Okay, here's a bit of information to sort of list out different method for sort of trading clients to consider when they want to enter China. The most commonly known method is definitely the OI as an overseas intermediary. This is probably the dominant sort of entry method on the market today. It basically the trading clients would just need to open up a account with a broker that has OI status with Chinese exchanges, and then once that is established, we're able to sort of just make sure both CQG system on both broker side is active, and then we can establish that trading route, and then it connects to the clearing brokers sort of CTP environment, and then the orders goes to the exchange. The second method is the OSBP. It is a relatively newer method. You know, basically OSBP, as in Overseas Special Brokerage Participants, is a offshore broker, but have obtained the membership at the exchange. Currently, this method is offered only by INE, but we are, you know, we're observing whether other China exchanges also, you know, consider offering similar options to the market. The biggest difference between OI and OSBP is that as a offshore broker, OSBP are also allowed to onboard other OIs, right? However, they are the same in a way that all the trades, as they sort of enter China, will still need to be cleared by a onshore broker. There are also a handful of examples where direct clients can kind of open up an NRA accounts, non-resident accounts, bank accounts, to deposit funds in foreign currency, and funds can only be utilized to trade designated mainland international futures contract and transfer between banks and futures companies. So we have seen a few of these examples, but they are mainly sort of Chinese corporations that has a foreign branch that's carrying out a sort of direct trading relationship. You know, very rarely we see a foreign firm who's able to sort of establish that. So OI and OSBP are still two of the most viable method of the client can enter China with. As I mentioned before, the Q fee and RQ fee expansion is a very exciting news to the industry. As we can see that as China sort of expands the market to cover commodities for QFI and RQFI clients, we actually think the traditional QFI and RQFI clients, which the scheme has been available since early 2000s, but since China opened up this new sort of segment for QFI and RQFI clients, we're seeing actually new applicants that's applying for QFI that's focusing on commodities, right? Because QFI and RQFI, previously clients are usually trading stocks or fixed incomes, but for commodities, since QFI has been now offered to trade these, we're seeing new applicants, and the regulator have also sort of lowered the barrier of the application, and also the speed of the application. The velocity has gone a lot faster as well. So we do see this becoming also a rather exciting development for the industry. And the last one, if you're big enough for foreign firms, of course, setting up a local entity would also be a very optimal way to trade China. But of course, the cost and resource required will be at a different level. So over here, I have a little diagram of how different parties sits in this spectrum. I'm happy to go into more details down the road if any of the audience is interested to have a more detailed discussion on this topic. Okay, so here is a very kind of simple diagram of how does CQG offer the solutions to our clients in terms of enabling offshore and onshore brokers to connect. A lot of times when when a broker has OI status and also has sort of CQG sort of broker environment, they're able to set up omnibus account fairly quickly. Once the omnibus account is set up, we then can utilize the CTP credentials that's been issued upon the OI status being obtained. Then we use that sort of CTP login credentials for the OI to sort of log into China side on the CTP order entry system, which we're closely integrated with. And once the brokers has identified the sort of partners to work with, it usually takes us less than a week or so to get things up and running for our clients. In some cases, UAT testing is requested, and we do assist in performing them. However, we have, because it's all the same route, it's the same network, it's the same sort of office environment. Although they're securely separated, each broker has their own instance, but because the infrastructure is the same, we've done maybe a few dozens of UAT tests in the past few years. So if a broker wants the fast sort of onboarding experience, we can get it done within a week, and UAT testing may not be required. Okay, so here is also a sort of reverse picture of how we support clients locally in China, but may have relationship with offshore brokers. A lot of times when traders that's located locally in China, when they want to kind of execute orders at global exchanges, they're connected via the internet. We offer a solution where we have a point of presence. We have a POP in Shanghai, China, as I mentioned, that allows our users to sort of connect at their access point. Right there and then, they've entered into our globally connected lease line network. And then, once you entered our pub in Shanghai, you are basically accessing, exchanges in Chicago, in Singapore, in London, in any global locations where we have already kind of existing lease line connected. You're able to kind of share that network, that we've already built. So the performance using the CQG trading software to trade globally it has been very optimal and superior to some of the other softwares that's connected via internet. This is important because some of the clients who's usually spreading between the Chinese exchanges and also global exchanges, and we're one of the rare options available on the market that's able to offer kind of both of that world from China. So very soon we'll be supporting the third-party software who currently uses our order routing system already, but we didn't sort of open up the Chinese sort of pub for them to access and send orders. But we will be soon be opening that to some of our peers in the software space. Okay, I'd like to just kind of iterate again. We being one of the first movers in the future space that's foreign-based, entering China, we have done our homework. We have done a lot of trial and errors early days as well to make sure we've done things correctly, including we had to localize with China exchange rules. That there's unique sort of instructions required, such as close today, close yesterday, hedge or speculation positions. There's cancellation limits daily at 500, etc., etc. We have made sure all that nuances have been sort of accounted for and also ironed out for international sort of participants to enter China. We, as I mentioned, we're located in Lujiazui, Shanghai, where all the brokers are based, and all the exchanges have infrastructure here as well. So we're always sort of intertwined with the development of the market. Any requirement from our clientele, from broker side, from client side, we very quickly react and then discuss with our partners. And make sure that we come up with the most effective solutions to accommodate for the ever-growing requirements from our clients. We have also sort of continued to better our partnership with a lot of the local vendors, brokers, and also we aim to not be just the sort of front end and mid office provider. We really view ourselves as an infrastructure provider because we do allow a lot of the external software to sort of piggyback on our global network. So our goal is to make sure that clients can enter China one way or another through CQG, right? So we've been continuing to speak with a lot of the buy side CTAs and whatnot that they have plans to enter China with their own application, and we're making sure that that's also integrated on the China side with CTP and exchange. Okay, and I do foresee that as the sort of momentum of foreign investors entering China is growing and growing. We do expect more kind of Chinese floating brokers would be sort of setting up infrastructures to grow that part of the international business as well. So we're here to continuing share our experience and also support some of those efforts with our local prospects. Oops, sorry. Okay, here it is. Okay, So here I have a list of trading front ends that is offered to our trading clients. We have a pretty good collection of different types of software that is designed to do a lot of the same things, but in different ways, right? Our flagship product is called the CQG Integrated Clients. When we sort of concentrate a lot of our resources on that platform, but we also have different types of software that may be targeting a more a sort of lighter requirement type of clients. And also, the API offering is also a very key solution to a lot of the buy-side firms who wants to use their own application to trade. Over here, I have a more sort of granular comparison between different front ends that we offer. As I've mentioned, the integrated clients on the far right, that's a deepest shade of blue, is where we sort of house all the features, data, and advanced functionalities. Basically these are targeted for the most sophisticated institutional traders, both from prop trading or commercial firms and whatnot. We also have a lighter version called QTrader, which I'll show some of the interfaces in a bit. But QTrader is designed in a way that it does a lot of the things that that integrated client does, but at a rather limited level, right? So if you don't need some of the advanced features, you just want to kind of place orders, have basic charting, basic functions, and this platform will suffice as well. The platform in the middle is called CQG One. This is actually not yet on the market. We are planning to launch this product by probably Q2 next year. CQG One is a product that combines the more sort of sophisticated and powerful features from our installed version of softwares, which is what I've kind of introduced earlier, CQG IC and CQG QTrader. But then we want to build those features on a more web-based sort of foundation. So it's more dynamic and nimble, and it's much more sort of intuitive for someone who just started to get familiarized with CQG solutions. So on the left-hand side, you can see that we have a product called CQG Desktop. It provides still a very sort of serviceable features. It is web-based. It's basically the same as CQG Mobile on the left. It's just that one is browser-based, the other is sort of mobile app-based. So they're the same sort of HTML5 foundation. So we've introduced the web-based platform ever since I think maybe 2013, 2014 or so. Because of some of the limitations, we've sort of offered the features that's offered on the installed version on a very limited basis on the web-based version. With CQG One that I've just mentioned earlier, we aim to sort of combine the best of both worlds, and then sort of have a more sort of next generational per se product. Okay, I'd like to kind of highlight, what do we mean by, sort of enabling our products to fit requirement in China, and what was a crucial step that we took. A lot of the foreign sort of based software, as they want to sort of turn on the features to trade China, there are a lot of difficulties to sort of just change up your platform to add fields that works for China exchanges. In particular the long short yesterday positions, as well as the hedge, arbitrage, and speculation kind of order types. We have early on sort of changed the base of our sort of order routing infrastructure to accommodate this type of instructions. as you enter kind of China trading symbols on our platform. And this is available across all of the softwares that we offer. I'd like to also mention, right now we are probably one of the fewer software that collects, global data, Chinese data, and also offer trading capabilities on both in one platform where you can sort of manage your broker account on the platform. You can manage several broker accounts on the platform simultaneously, right? So as you have say one leg in CME and you have your U.S. broker accounts, you have one leg in China with INE, with your OI or direct China accounts, then we're able to accommodate that. That is a powerful sort of feature that we've been offering to the market. And not to mention, the local technical support also allows a lot of the FCMs and users to sort of command us to offer more sort of trainings and also share some of the strategies or some of the features that people use to make sure that the trading volume is optimal and is well supported. Okay. So I'd like to kind of quickly just mention a few key things of each platform. Again, we won't be offering a sort of detailed demo today, but our team is available to offer any sort of in-depth demos targeting on your specific needs. So feel free to get in touch with our team, and we will either share some of the materials that showcase the feature of the software, or we'll schedule a one-on-one session with interested parties. So QTrader, as I mentioned, it's a lighter version of integrated clients. It does have basic function like DOM Trader, order ticket, spreadsheet traders, and more. DOM Trader being depth of market, it's one of our popular feature. QTrader does support linkage to Excel, right? So you can either extract data from Excel and then conduct further analysis, or there's actually a feature that you can trade directly on the Excel spreadsheet, right? So our team will kind of help guide through how to enter those formulas. And many times we already have a lot of the pre-built formulas in Excel that our clients can utilize. One thing to note that CQG QTrader, although it is somewhat similar to our integrated clients, but it does not sort of cover the depth of the history of data, the depth of features. For example, it only allows sort of one chart at a time when you use QTrader. So with clients that has definitely switch my slides here. Oh, there it is. Okay, so integrated clients, as I mentioned, is our flagship product. It allows abundance of possibilities for traders. It allows multiple charts, multiple monitors, hundreds of technical indicators, server-side synthetic spreading, which is available through spreading a spreader module that I'll be introducing in a bit more details later. It also allows a client-side API integration. I'll explain more on CQG's API offering, but basically we have two types of API solutions. One is targeted for a single trader. One is geared more for enterprise adoption. So for a trader who like to sort of utilize our client-side API, client being the software, we make it possible to seamlessly deliver CQG's market data and analytics to external applications. As long as the traders subscribe to IC, the options available through IC is to have trading API to grant access to the CQG hosted gateway for order routing as well as obtaining market data. The charting API allows third parties to publish their own custom analytics in CQG as studies, indicators, conditions, formulas to be used and displayed on various CQG interfaces. So the API application on integrated clients is actually rather popular for a lot of the prop trading teams who may think that deploying resources, developers to sort of enable the API capability is a bit too heavy. So they will use the software version, but with the API extension to carry out the trading capabilities. Okay, CQG Spreader is probably our most popular sort of module across our suite of products. It allows sort of setting up spreads with up to 40 legs and actively quota to 10 legs. It allows clients to sort of, like I said earlier, manage various broker accounts on the same platform, as you can sort of prioritize different leg placement, and also you can kind of do a lot of the cross-account optimization. So this spreader is managed by a sort of server-side based sort of network that we have a very sort of specific set of routes created just for the spreading clients. So the latency is rather low on this offering, and we maintain the low latency network ourselves. So the performance of this software is probably one of our most sort of powerful offerings to the market. Okay, so the web-based platform, as I mentioned earlier, is our newer product line. On the left-hand side is the currently available CQG desktop and mobile application. Web-based, it does most of the sort of features for a lighter requirement type of traders. On the right-hand side, CQG1 is the sort of newer generation product we plan to offer next year. That would sort of make a lot of the features on our installed version product available on the web-based platform. So a lot of the functionality is currently not available on the web-based CQG desktop, such as Spreader, will be added to the CQG1 kind of web-based platform. Okay, so here is one of our also newer offerings to the market. We created a new sort of set of algos in the effort to answer a lot of challenges that were shared to us by our clients. Challenges include, how do you deal with large orders and liquidity risk? The structure of future market creates slippage cost and other risks in the execution of larger orders due to the central limit order book. Executing as sufficiently a large order at a fair price is often impossible. Placing large passive orders on the best bid or offer is prohibitive, as the opposite liquidity often disappears as a result. Also, it is hard to balance the uncertainty of working an order over time versus paying a liquidity premium for immediate execution. So in answering those challenges, we come up with this offering that is basically allowing our clients to use algos at our co-located server, right? So rather than using local algos set up on their machines, we allow users to sort of select from our list of advanced algos to be done at the server side. which time to extract data obviously is shorter, and then the execution is also a lot more efficient. We are able to improve the latency dramatically using this offering. This is a rather sort of new kind of beta offer at the moment. We currently only offer this to clients who trade CME. However, by June next year, we should be able to offer this to all the exchanges we support globally, which would include the Chinese exchanges. Okay. CQG API is one of the more sort of important offerings that we currently offer. We currently have about 300 plus API sort of clients, partners that uses our infrastructure to obtain market data and send orders. As QFI sort of opens for foreign clients to trade China, many clients will probably want to take the API route of connecting into the China environment. We definitely offer a solution in that. We have a team that is there to assist developers to sort of conform to our API environment. And then once the clients kind of does the conformance, we would issue certification, and then sort of we also will allow a lot of the sort of UAT testing, and other integrations with our API offerings, down the road as they are required. So right now, this is probably one of the easiest sort of API solution you can develop into. Okay. So as I mentioned a couple times ago, previously, the FCM can take advantage of CQG's post-exchange gateway, and we currently offer it at all the hubs listed here, and omnibus trading is also available through this network. One thing to note is that the software that we provide, FCM, is a web-based software called CAST for customer. Is my slide moving? Okay, yeah. Customer and account service tool. This is the basic structure of how our CAST is offered in terms of account management. It basically provides a lot of flexibilities for our clients to set up different layers of sales series, which can be a sales rep, or it can be a team, it could be a location, and underneath that layer, clients can set up different customers that can have one or more accounts underneath it. We also have a layer that allows a lot of traders to be set up under different accounts. The risk is usually controlled at the account level, and then different traders would then kind of be able to connect to different accounts with different kind of risk configurations. So here are some of the features that we focused on providing to FCMs from an account management perspective and also risk control perspective. Over here, it's a quick diagram of how we kind of, because CQG does not offer a back office solution. We sort of cover the front to middle office. So a lot of the back office files are sort of parsed to us via FCM itself, or from the back office solution they use. So we have a set of different configurations to allow integrations with different back office software. The notable ones being GMI, Rolf Nolan, and we also have a format called RN host that's very easy for different back office systems to integrate with our mid office. Okay, so lastly, I'd just like to mention, there are more than what I've discussed that CQG can offer. including a custom contract and pricing publishing tool that's used in a lot of the OTC venue. We offer white label solutions where companies can simply adapt our CQG desktop software and white label with their own brand name, and they can right away offer trading front ends to their clients that's more sort of designed to their needs. We have log engine for RFQs and responses that basically powered by our internalization engine, and we also have a very sort of robust historical data factory that allows our clients to extract decades of data that is again not consolidated or filtered, just tick by tick clean data. They will be maintained since the inception of the company. So great for backtesting requirements. So any of these is of your interest, please do get in touch with our team, and we're happy to discuss further. To close it out, I just want to kind of mention something very key. If you're a trading client, you want to enter China, just check with your broker on its OI eligibility and then whether CQG is available to them. And then if those boxes check, then you're good to go. For brokers that want to enter China, maybe you already use CQG, right? Then you can just kind of speak with CQG and then identify the China clearing broker you want to work with, and we'll help to get that set up for you. Our team, located in different parts of the world, will be able to sort of walk through all those steps from the FCM perspective and also from the trading client perspective, from our mid office as well as our front end solution. So we hope to sort of hear from you soon as you decide to sort of start your endeavor with China markets. We do have a link on our website under the China connectivity section. Please access that or get in touch with us at the information listed here. I'm sure these will probably be distributed later after the presentation.